Hello and welcome to the Australian Market Digest weekly technical video report. I'm Stephen Hogan, your author and regular guest expert on Sky Business Channel and CNBC. Before we get started this week, just some normal quick housekeeping. Please remember that any information contained in this video report is of general advice only. In preparing this video, Novus and myself have not considered the relevant personal circumstances of any person and should not be relied upon for the purpose of making any investment decision. I am an authorised representative of Novus Capital Limited, and the opinions or views expressed in this report are the personal opinions of myself and do not represent the views of Novus Capital. Novus and myself believe the information in this report to be accurate, reliable and complete, but provide no warranties on its accuracy, reliability or completeness. Please consult a licensed financial advisor before acting on any general advice contained in this report. If you are looking for a financial advisor, of course, please contact me on 93750119 or visit my website www.stephenhogan.com.au and request a consultation. Okay, so let's get started this week. The first chart that I've got for you this week looks to me like a pretty good short-term trade here at the moment. I'm not going to get too overexposed here in the short-term portfolio. Obviously, with reporting season coming up in the next couple of weeks, we do have 7 Group in there, and we do have AWE. And I think I'm going to add this one here today as well, ACR or ACRUX in the pharmaceuticals biotechnology sector. You can just see here on the chart, previous support was this $3.36 level. It was a support level over here as well in mid 2011, and broke through that level a little bit here in mid to late 2012. And obviously we're back at these levels here again. Very messy sort of chart, this one at the moment. Generally when you look at a chart like this, you'd feel pretty neutral about it. Pretty strong rally here off that major low there, which was obviously a previous support level there as well. Nice strong impulsive rally. This is more of a consolidation. It fell away quickly here in this last sort of week, but more of a consolidation than a strong buying week there, obviously. And then we've come back in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks, and it's failed to go to a new low. So, sellers are not really dominating this market too much. And we can see here that, I've just highlighted the fact down here that volume has increased the last 2 weeks, albeit it's on the way down. But also, obviously, for every seller, there's a buyer there, so volume's increasing as we get closer to this support level. And I've also noticed just down here some divergence on my stochastic oscillator there as well. So we went to a major low there, and then we've, even though price action has gone to a new low, we've failed to go to a new low on the stochastic. So we've got divergence, we've got volume increasing, we've got a strong support level being approached. Obviously, the support level there you can see is $3.24, and we're at $3.36 here at the moment. I'd probably have a stop, short to medium term traders. I'd have a stop somewhere around about $3.15, just in case we get a little flash down past this $3.24 level. It's always really important to have your stop just a little bit lower in case some stops are triggered and you get a flash down. So reasonably good entry here. I think really good risk reward. So an entry of $3.36 with a stop around about $3.15. So your risk is 20 cents, and your upside potential, I'd say your first targets you can have somewhere up here, which would form some sort of pennant just up above $4 there. So around about 70 cents in upside potential and 20 cents downside. Which is around about a risk reward of 3 to 1, I guess. So that's ACR. So I'll get that on the short-term model portfolio this week. And Atlas, obviously everyone knows. I've talked about Atlas quite a bit on Sky Business Channel, and obviously it hasn't done very well. We've been buying it since levels around about up here, and obviously we've fallen away with the market concerned about China slowing down and moving back towards 7% GDP. I've held on to this one, probably to the mistake of my own, but I've held on to this one because I believe in this stock from a long-term perspective. I think it's a very good takeover target. I think the assets they've got are very, very good, and this company will prove to be a substantially good investment, I think, in the future. I think I've got long-term targets up around about $3. But just here at the moment, let's just look at the chart at the moment. Is there a major low in place at that 85 cent level? I believe so. If you have a look here, volume increases at every major sort of low that is put in place. This one's not so major. Obviously, we fell away not so long afterwards, but look, volume's increasing here again on the way up. And the stochastic oscillator is basically pointing straight up, which is a good sign. Leveling off here a little bit at the moment, but what I would say in this one is I wouldn't be trading this from a short to medium term perspective. If this is one that you want to take a look at, obviously most of my clients have already got it in the portfolio, but if you're a new client, or sorry, I'll just go back to that one. If you're a new client or you're looking to get some exposure here to a good stock longer term and picking up at very cheap levels, Atlas is a good one for you. But like I said, yeah, wouldn't be trading it on a short to medium term perspective. I think what will probably happen here is, well, I don't know why that keeps going across. What I think will happen here is you'll get some. It should build a base here, and we should get some consolidation for quite a period of time. So we'll probably get jumps up to this level, somewhere in here between $1 and $1.50. And then we may just get some consolidation or pullbacks back towards $1, and it'll be quite messy here for a little while until they start to ramp up production, which they are over the next year or two, with some new assets, obviously, that they've got there. And so until iron ore stabilizes up above $100 here in the market is convinced it's going to stay there, and China GDP stabilizes around about this 7% level, and the market's happy that it's reasonably confident that it's going to stay there, which I think China will. The Premier of China came out last weekend and said that minimum downside on GDP is 7%. And whilst we've heard some analysts panicking in the media and so forth about China going down to 7% GDP, that's a big part of the world, second largest country in the world. From a GDP perspective, growing at 7%, and they're committed to growing to 7% and don't want to move any lower than 7%. So that's quite significant and quite a big trading partner to Australia, even though they may be moving a little bit more away from infrastructure to a more services orientated economy. They've still got a lot of infrastructure there to build. They've still got a lot of cars to build in relation to steel. I think in some of the provinces only 80 people for every 1,000 have a vehicle in China at the moment. So there's still a substantial way to go in China, in my opinion. And we've at least got another decade of 7% growth there. So Atlas is a good one from a long-term perspective, in my opinion. If you want a stock that is looking like a very good takeover target, and ramping up production, and one of our lower cost producers out there. Okay, so just moving on to ASL. So obviously I'm not a huge fan of this mining services space at the moment, for good reason. Sentiment, is really low in this sector at the moment, and some investments that previously, 12, 24 months ago, that were really A-grade investments have really moved out of that environment now because earnings are just are very unpredictable. ASL is one that I just wanted to show you because it's another one that I believe we've probably seen a major low put in place now at that 78 cent level where it went back to. You can see there the fact that I've highlighted the volume increased at the low, and on the way up, volume seems to be increasing on the way up, which is always a good sign. Generally, a lot of charts, when you see a low put in place, you'll see volume taper off on the way up, and this stock volume's increasing on the way up. So that's a good sign for the stock there. And also you can see that I've also highlighted divergence on the stochastic oscillator there. We went to, you can see just in here, major low on the stochastic oscillator all through there, which is around about this price level, and we've gone to another low, a major low or low below the previous one, and the stochastic oscillator failed to go to a new low. Okay, so we've got divergence, we've got volume increasing. The earnings outlook on this one is still reasonably good at this time, even though it is in the drilling space. So probably, I'd even say with this one from a short-term perspective, if you're looking for a short to medium-term trade, I'd probably be leaving this one alone. If you're looking more at a long-term investment, you still believe that the mining space is going to do well. I mean, there's a lot of analysts out there that still believe that Ausdrill will do very well, despite the fact that we are seeing capex decreasing from the major miners. That these guys are still in a very good place, and have good relationships in place with some of the major miners and so forth. So ASL, from a long-term perspective, you could buy it here. If it broke down through 78 cents, look, I'd probably just be out of it. So just keep that aware. Be aware of that when you're purchasing this stock, and your position size or your stop is going to be a fair way away, around about 78 cents. So just make sure your position size is in accordance with that. But yeah, I think probably from a long-term perspective, we've seen a major low put in place, and I'd expect it to at least go back to the 38.2 retracement level at some stage, which is $2.13. Possibly if it got up to $1.61, the 23.6 level, you may just want to get out of it there, which is just around about that $1.60 level. Okay, so not too much here this week in the technical report. I don't want to get too carried away with the reporting season coming up from a technical perspective, because as we all know, the technicals and the charts can give us a good indication whether a company is going to report well, and how the market is thinking about it, or viewing the reporting season approaching, and how a certain stock will report by how the chart and what price action is doing. But we all know come reporting season that we can get major surprises there. So on the short-term portfolio, I'm going to keep it very simple here until we see reporting season flow through. I'm very excited to hear businesses and how they're reporting. We've seen the Aussie dollar come back a little bit. We've seen interest rates come down, so we should start to see some of that flow through soon. Maybe not this reporting season, but we should start to see some positive outlooks from some businesses, in my opinion, especially in that industrial space. And yeah, so looking forward to reporting season. Don't want to get too carried away here. So just recapping, ACR, short-term perspective, we're gonna put a buy on that in the short-term model portfolio with a entry level sometime today. So I'll email that out with a stop at $3.16. And then from a long-term perspective, we've already got Atlas Iron in the long-term model portfolio. So we're looking at that one from a medium long-term perspective, and think it's a good buy down here, and a major low is more than likely in place. And then Ausdrill. I'm not going to buy for the long-term portfolio, but I know there's a lot of people out there with this stock in their portfolio, and also with some exposure to that mining services space. So I just noticed that one from a technical perspective, showing some signs of life. I'm not going to put that in either of my portfolios, but I just thought I'd talk about that one quickly. Okay, so that's it for this week for the technical report. Thanks everyone for tuning in. We'll see you again next week. Just remember, if you would like a free portfolio review and have myself look at your portfolio and let you know whether it's suitable to current market conditions, whether you're taking too much risk, your fees, evaluate your current strategy. I'll talk to you a little bit about covered calls. Please feel free to get hold of me at the website www.stephenhogan.com.au, or give us a call on 93750119. We obviously specialise in self-managed super funds. We also, obviously you can see from a technical perspective, we specialise in short-term trading there as well for people who are looking for short-term strategies, and we also do a lot in options there as well. Whether you're looking to write covered calls in a self-managed super fund and generate some income, or whether you're just looking for short-term option strategies such as bear call spreads or bull put spreads and so forth. So if we can help you in any way and increase your trading, we certainly love to hear from you. Until next week, I'm Stephen Hogan. I'll see you then.